Ajay Srivastava is the market master today. He's CEO at Dimensions Corporate Finance Services. Ajay, great to have you with us here. Thank you very much. In your opinion, will this big outperformance for the Indian stock markets continue?
Good morning. I think it will continue. And as we keep saying, the fact that it is not about the fundamental, it's not about the P, it's still the demand supply continues to be in favor of stocks being bought. At the end of the day, between the investors and the PF put together, if 50,000 crores of money has to come into literally every month in the equity system, and equity fresh supply is not that much, there is nowhere else for the stocks to go but go up. And therefore, the little, the mid-cap playpen, which I call a playpen because no outsiders allowed to come in place. FIs are not there, FPIs are very small. Therefore, that becomes a very good safe haven, and we can survive with much higher Ps, etc. And I think what's happening in America very clearly, not only on the economic side, but on the political side, what they're doing gives us great comfort that we are in a better place than what America once was, the haven of investing. Now it's the last choice of investing. So even the investors in India who wanted to take money to the US or global investors, it's not an option for them now because that's a country in decline where there is no chance of you making returns given what's happening on the political side more than even the economic side. So all said, demand supply is good for Indian stocks. We are a good kind of a insulated economy at this point of time. Market is insulated, and RBI still insists on negative interest rate for savers. Till that continues, you have a very safe journey in equity markets.
Okay, by the way, the mid-cap index is in green now. So, that has been the go-to pocket. And just keep an eye on the bank nifty now because, we've seen this on such days. The bank nifty actually leads the recovery. It's now above 41,000. I think may have trapped some shorts in the morning and, 41,200 or thereabout is where you have a lot of call writing. I mean, if you were to take that out and get into the green, that could be very interesting for the bank nifty because that's what normally the trajectory of the market is on days like today. The mid-cap index first turns in the green, then the bank nifty follows. Of course, the nifty still has issues, but ITC is the other one which is seeing a remarkable sort of surge. So as I said, the first dip has been bought. The SGX nifty low is being respected. Our market, of course, has been quite resilient. It's taken out some of the excesses. So who knows? Could be a very interesting day. Expiry as well. There were some shorts yesterday which got in, and some shorts, I guess, in the first 15 minutes. And if the morning low holds, it could turn out to be very interesting. Ajay, hi, good morning. ITC
good morning.
Is beginning to make big moves once again. Almost 350 now. 200 looks distant past now, of course. But it was just 6 months back. But what next?
I think it's, first of all, investors owe a big thank you to everybody in the media who just pommeled the right stock and the management to say do something. And I think that's been now showing up, the things about hotels being kind of maybe demerged out of it, and they're going to do a structural change. If that happens, it's still an undervalued stock. I'm not recommending it. We have in our portfolio, but I'm just saying it's undervalued because a large part of that generates serious amount of cash flows. And coming back to the point, as we just said, if interest rates start to rise, the treasury income will go up. And that's kind of literally, a gold mine sitting there. It's still tremendously undervalued stock in our view. If the management is right in an intent to structure it correctly, I think investors got a good ride. I think they had a rough time for over a decade. It's about time this stock starts to deliver results. Just the way I think finally all the guys who laid low like NTPC, etc., are now delivering. I think it's time. It's done a good job so far in this year, no doubt about it. But I think there's a long way to go because just purely in cash flow terms, the valuation is still very, very low in our view compared to the rest of the industry.
Okay, well, at least there's something to thank the media for, right? Otherwise, we're always receiving always receiving more brickbats than bouquets, but we'll take it, whatever we get. The market, by the way, just look at the resilience, right? I mean, in an environment where the US has hiked rates third time in a row by 75 basis points. This is not a bad outcome at all. The Nifty down just about 50 points. Just another day for India. But I want to talk to you about Infosys because, it's hit a fresh 52-week low today, Ajay. It's down about 30% this year. But the management is very confident that they can hold on to their revenue guidance. So they don't see too much of a problem there. What do? Do you lap up the stock thinking that, I may not get this opportunity for a while? Or do you stay cautious?
See, the view on IT remains the same. IT is, again, back to the point, Sonia, that, good morning, that fact that demand supply is hitting the stock. There's too much of supply coming into the market. FPIs are in a selling mode. US IT, you know what's happening to the US in markets at the end of the day. So there is no support in terms of fresh supplies coming into the market. And that's the difference between a TCS and Infosys, that the supply of stock in like TCS is much more limited. But if you look at supplies like HCL Tech and others, Infosys, it's a very high supply, which they still own about 40% plus of the company FPIs at this point of time. So, you know, it's a very good, if I keep saying, it's very good for a long-term investor who want to just retire and put the money away and keep adding on, because the reason being simple, they give dividends, they give buybacks, they give whatever they need to reward the shareholders. But in terms of pure return on capital employed, I think it will suffer compared to rest of the industry, because purely the supply of stock is very large. So every time the stock goes up, and you notice number of times the last couple of years, the profit booking starts in the stock from the overseas. It's not the Indians who sell it, it's all the overseas selling. So I think, as we said, you know, for us, the Indian playpen, the mid-cap, large mid-cap space is the right place to be at this point of time for return on capital employed. It doesn't matter the fundamental anymore of Infosys, because it'll get dictated by what the FIs do overseas. If they're selling in US market, they're selling in Indian market, they will sell IT no matter what. You know, the company can talk about the fundamental. It doesn't matter to them. It's an industry sale proposition. So I think for an Indian investor, unless you are really willing to keep it for 10 years quietly in a retirement account, if you need to maximize returns, you know, generating alpha from IT is very, very difficult. You can get it for short periods, but if you look at a 2-year, 3-year time frame, you'll get normal returns out of IT.
Normal returns, not supernormal returns. We're used to supernormal returns, right, Ajay?
Well, we got a man out there in number 2 position, and if you see the stocks of that, those are called returns, aren't they? Those are called returns.
Ajay, are you tracking the hospital space? Today we've got an important sort of judgment. I mean, long in the coming. This is the Fortis thing I'm talking about.
I know, yes.
The Supreme Court will decide on the matter. I mean, if it goes through, they get the go-ahead for the open offer, it becomes a IHH company, right? And then should we expect a re-rating? I mean, like what we saw when KKR came into Max, or do you think it's too much to expect? What's your sense?
No, I think that if they win the judgment, it will definitely be re-rated. Not because only IHH, but because behind IHH are the Japanese who have the tons of money to pour into the system. So I think it'll be a great story if it gets a positive judgment. But I don't even know, you know, we sold out. We had a holding there, we sold out just now. But we don't even know what's going to happen if the judgment goes the other way. How do you unravel the whole thing, ownership structure, and you know, a critical necessity like hospital? So I'm not sure exactly how will it pan out at the end of the day, because even if an open offer comes through, it's irrelevant, the price is lower. It doesn't matter anymore. So I think it's all boils down to the fact that the overhang goes away. And if the overhang goes away, I think the Japanese are going to play a big role in this company. So for investors, I think it'll be a good joyride, because in terms of valuation, it is at much less than this Apollo at this point of time. But of course, it's much smaller. It's not growing sufficiently. All those things that goes with the hospital industry. We went out of hospital industry because I think for the time being, for next couple of years, is going to be underperformance in terms of market placement. You may have a short blip on this company, but I think it's an overvalued sector at this point of time, producing suboptimal returns for the investors. And there's so much more to be invested in at this point of time. Unfortunately, we won't find hospitals to place to invest in a country like India, which is sad, but that's the way the capital intensity is.
Okay, by the way, there's a bit of a second dip, which is now, coming in now on the market. The mid-cap index is almost back in the red again. The bank nifty is down 200 and the nifty is down about 90 points. One stock which stands out, though, is Bharat Electronics, BEL. Just pull out that. It's after 2 or 3 days consolidation, it's a breakaway gap. Remember, I was explaining from the data of the last few weeks about the kind of money which has been chasing stocks, and BEL stands right on top in that. So, it's almost about to break out a recent high. That's a 7-day chart. I think if you pull out a 1-month chart, that point will be, I think, perfectly corroborated. Ajay, there it is. 1 month, it's up quite a bit, had some consolidation, about to break that out now. Ajay, defense has been such a big theme. I mean, there are very few stocks, so almost everything is being lapped up. And floating stock is an issue in names like HAL and BDL. Is this a space where you're buying?
Well, we're not buying anymore. I think we have been disclosing it to you that the last 1 year or so, we built up a big position that we're not buying anymore. I think in terms of valuation, if you feel left out, I would tell the investors, wait for a while. It doesn't matter. You will get a chance to get in again. It's overvalued. Too many people are chasing the same theme at this point of time. There will be a chance to get in, but I think the dynamics of today's valuation tells us that it's way, way overpriced compared to what we can see in the near future, because government's defense plan of procurement is not that high at the end of the day. Their margins are not, yes, they're fixed margins by and large. They get about 7.5% odd effectively on most contracts. So it's not like a big gravy train as most people think. I think for the time being, the big change of price has happened. The price discovery has taken place. Now it's a FOMO which is chasing this stock. Wait a while, doesn't matter. Of course, BL just now did a bonus issue. So to that extent, optically, the price is lower. So people feel it was 300, now it is 100 rupees, so it works the while. But it was a bonus issue, not a price correction. I would say hold off. Don't chase FOMO. It doesn't do well for your portfolios. You will get time to buy it. Don't worry about it. There will be times to buy it and you will get it. So I would not buy at these levels, at these prices. I would hold on to what I have. If I don't have it, well, there's so many more things to look at, but don't chase it. I think chasing is the worst thing in this market.
Okay. Well, on that note, we'll let you go. Ajay, thanks a lot for stopping by and speaking to CNBC TV18.
Thank you very much.
Have a great day yourself. Thanks for joining in. Okay, for the